Well, how do you know if your advisor is not a good fit for you? What about an advisor that maybe you're thinking about working with, but aren't quite sure if they are good for what you need for your financial future? What are the red flags you should be looking out for? This video will highlight 5 of them to be on the lookout for so you can make the best decision. Welcome into Perfect Game Retirement. Ben George with Ryan Ledden at Black Oak Asset Management. He is a certified financial planner and someone you're probably going to want to work with. But we're going to point out those red flags today, Ryan, because look, not every advisor is created equal. I think that's what a lot of people maybe get confused on. They think everybody kind of does the same thing, but that's not true, is it?
No, it's there's so many differences, so many ways of doing things, so many different processes, so many different licenses that people have that they can or cannot do from an investing standpoint. So there's a ton of different ways, and we may not be a fit for everybody either. So it's just that's where there's a ton of us out here. I mean, we're in northern suburbs of Atlanta, and there's advisory firms all over the place. So there's a ton out there. Some good, some bad. And so that's where you need to go through and vet different advisory firms and just get a good feel. There's a lot of great ones out there, and it may just boil down to really a personality fit. So, do your due diligence and see what's the best fit for you.
Yeah, and I think that's the hard part is, hey, what is my due diligence? What should I be asking? What should I be paying attention to? Well, this video is going to kind of highlight some of those things I think that are most important to kind of keep an eye out on when you're meeting with someone, when you're first talking with someone for the first time, and kind of getting a better sense of what they do and how they can help you. Be aware for these things. So number one here, I think, is that one size fits all approach. If anybody is laying out a plan that's going to work for everyone, or it's just, hey, here's our financial plan, this is what we do, probably not a good fit, right?
No, you can't. I mean, there's ways to scale a business. As a business owner, I get there's some things that need to be automated, that need to be similar and the same. But when it comes to how people invest and what their plan is and different investment options for different people, depending on net worth, I mean, you can't have a cookie cutter financial plan or an investment plan either at that regard, because people just there's different needs. There's different, there's tax law, but there's different kind of taxes that may affect higher income earners maybe than lower income earners. So there's so many different things, but a cookie cutter approach, again, you have to be able to have scale if you want to grow as a business, but that doesn't mean everyone is in the same, everyone's a round peg. That's not the case. So you with a round hole. So sometimes you have square pegs, and it's just that there's differences there. That's the fun part of my job. My goodness, if everybody had the same plan, that would get so boring for me, and I would not enjoy what I do. So it needs to be different for everybody.
All right. So that's the first one, is having a customized plan. Somebody can explain that to you and how they help build that. Great. Second thing is just results, right? Everybody, I think, wants to know, Ryan, hey, what are my returns going to be? And a lot of people are going to overpromise. So what should you be on the lookout for in terms of, hey, what can I expect? Can I beat the market? What kind of returns should I be getting? What are the answers you should maybe be paying attention to?
Yeah, when it comes to returns, obviously, as an advisor from a compliance standpoint, you need to be very, very careful with that. You certainly can't over promise certain returns. There's going to be years, obviously, that there's going to be negative returns. But when we do financial plans for people, I get their feedback on, hey, what kind of rate of return do you want to use here? And usually we use very conservative rates of return. And sometimes we even do below average. So it shows, historically speaking, below average. So it kind of shows, hey, if we have a bear market several times throughout your retirement or even your lifetime, here's where you may end up. Okay, here's where if the market kind of just chugs along and does what it does. But the key is having financial planning software that bakes in those negative years, because they're going to happen. But you can't do a financial calculator and a financial plan on a steady, consistent 6, 7, 8, 9, 10% rate of return, because life does not happen that way. So there's going to be bumps in the road. So you need to plan for that. Now, to get it exactly right, that's impossible. There's no crystal ball out there. So the software bakes in those negative rates of return. And so you have, because there's always risk of you taking money out as the market, is down, whether it's down 15, 20, 30%, you're still taking money out in that bear market. So you need to plan for stuff like that. So over-promising results, I usually like to under-promise, not like on purpose, but we just like to say, hey, here's kind of a bleak kind of future of what it could look like, and here's kind of an average, and here's where you're at. And if your success rates are really high on those two scenarios, then that paints a lot of confidence for people.
Yeah, absolutely. So number 2 there, over-promising results. The third red flag to pay attention to is if your advisor is ignoring tax strategies, right? I mean, we talk about this all the time, Ryan. I think this is a big part of the conversations we have, and I'm sure you have at Black Oak. You got to be coordinating your investment plan with your tax strategy, right? It's not a year-to-year tax plan or tax prep. It's a long-term, ongoing tax strategy.
That's right. I mean, there's so much with our financial planning software that we look at projected Roth conversions and what those project out to, which are great. Those are fine. But I can poke holes in those projections all day long because we don't know what future tax rates are going to be. We don't know if the federal government's going to tax Social Security more, or what the Medicare premiums are going to be, and the thresholds that you go through from a taxable income standpoint in the Medicare. So a lot of wild cards. Now we still just kind of know what we know when we project those out, and we'll change when we need to. But yeah, it's not only like from an investment standpoint, it's not only what you own as far as investments go, it's what accounts you own them in, because they can be taxed differently based off the investment and what accounts they are in. So it's not just, hey, my portfolio is the best thing ever. It's, okay, here's a portfolio, but it needs to be in this account because of this reason, because it spins off capital gains and qualified dividends versus ordinary income or interest or bond interest, which is taxed at ordinary income. So again, how can we save on taxes to keep more in your pocket? Obviously, legally, pay your share that you need to with the IRS, but keep more in your back pocket. And that comes, again, from a tax planning standpoint. That comes from, hey, do we do Roth conversions? What does that look like? How can we take advantage of the tax bracket that we are in? So taxes are a huge part of what we look at.
All right, fourth red flag to be on the lookout for. Maybe more applies if you're already working with an advisor, but if you've got an outdated plan, or maybe you work with someone that's just kind of a, hey, let's go ahead and build your plan and you're all set. That's not a good thing, right, Ryan? Life changes. Things are evolving constantly, and your plan has to be able to have that flexibility to move with it.
Yeah, plans always change. Life changes. It can change in a heartbeat, in an instant. So we want to stay on top of that. Obviously, we tell people, hey, in between our meetings, that's why we post our calendar online. Like you just mentioned, speakwithryan.com. I mean, people can go on there and see my calendar. And if something happens, a job change, a divorce, a death, a parent passing away, whatever that may be, we want to know about those things. We may not know about those in between our scheduled meetings. So to have a plan and then kind of set it and forget it, that's not a prudent plan. Again, I've seen people come to my office with binders full of pages and charts and graphs, and they never look at it again. So, and we've even evolved and changed over time. And we've had different financial planning softwares. We've tried a few. We stuck with one for several years, and then we recently changed again, but this one's is about as robust as they come, but yet it simplifies it. So you want to make the complex as simple as possible, because again, I can give you 50 pages of data, and if you're not going to implement it, or it doesn't resonate or make sense to you, you're not going to use it. So we constantly use it. We give people access. We give people a login so that they can constantly look at it and look at and maintain what they need to.
All right. One last red flag to pay attention to here is if your advisor talks more than they listen. So I know, Ryan, we talk quite a bit here on the channel, but when you're in a meeting, your advisor should be letting you kind of lead the conversation, right? What's that conversation look like in your office?
Yeah, it is, and I've learned over the years to ask questions and shut up and listen. That's the main thing that you need to do, because I want to hear where they're coming from. I mean, yeah, there's a time and a place for me to speak and to talk and to go over the plan and to get in the weeds of this stuff as deep as I need to, or maybe not need to. But yeah, that's my job, is to be a very good listener and to help people out with some of these decisions that they're making that can be difficult to make. Maybe you have a married couple and they believe they kind of sit on different sides of the fence when it comes to that. And maybe I'm a good mediator in between. We talked about that before. So that's a big part of my job, is to listen, take notes, and then implement from their feedback, and then obviously give my expertise based off of what they're trying to do. So yeah, it turns people off if as an advisor, because you don't know what their understanding, what their level of interest in this stuff is. Some people could care less, but some people want to get into the weeds of it. So that's where just listening, you get a feel for that. And again, there's a time and a place in these meetings to talk, but a lot of it is listening and taking notes, and then implementing and talking about the plan based off of their interest level and how deep they want to go.
All right, very good. Well, just remember, a good financial advisor is going to build a relationship with you, right? And trust your instincts. If something feels off, ask questions, follow up, maybe even talk to another advisor, just kind of feel them out and get a better sense of how they could serve you, right? The right advisor is not going to keep you in the dark or make you feel like you're out of the loop. So some things to be thinking about. If you want to speak with Ryan, just remember that, speakwithryan.com. You can set up a meeting right there through that website, find a time that works for you, and begin kind of discussing these things and having these conversations, ask these questions. I think that's kind of what I want to leave this with, Ryan, is it's okay to be asking these questions to advisors when you first meet them, just to kind of get a better sense if they are the right fit.
That's right. I mean, you're right. Asking questions, don't feel stupid to ask questions, just point blank, ask them questions. And that way you can find the best fit for you.
All right, perfect. Again, speakwithryan.com. All the contact info is in the show description. Thanks for watching Perfect Game Retirement. We'll have another one coming soon. Please subscribe. We'll talk to you then.